Well, good evening all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 7th of November, 2022, 5:45 p.m. Central Time. I know it's gorgeous in Chicago. I don't know where it's at, where you're at. We're going to be in the 70s again this week. This is not usual for Chicago. We should be in the 40s and 50s, cracking 30s at night. It's completely crazy weather for the next few days. What isn't crazy is the marketplace. It's confused, I think. I walked in expecting starting last night through this morning, that we were going to be down in the stock market pretty good, that we would see the dollar back up, that we would see the metals give up something, and the energies give up the gains they had. Why? The markets were up dramatically on Friday off of rumors, innuendos that China was going to change its tough zero COVID tolerance policy. Okay. They didn't. They doubled down, if anything, according to their health minister. What'd the market do? We were up 400 points in the Dow today. I mean, I am confused. Then I started thinking about it at length, and I go, the only thing that makes sense is the market's looking at the dollar continuing down. The market is looking at the elections tomorrow and saying to itself there's going to be a change in the leadership in the Congress, and that means less spending, less of blah, 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 and the market's building that in. I have no other answer for what it could be. You might, I just don't, all right? And that's where I think we're at. Even today, you were breaking in the bonds and the notes all day long. Normally, that would be looked at, interest rates are still going. The news waves would have been full of it. We are going even higher today on interest rates. Look at this. You didn't hear one word. You heard about the election all day. So I have to think that's it. Nat gas exploded in price. All of you. Did I tell you you can't be short at this time of the year? It just comes out of nowhere. The first hint of a cold snap, you take off. I've done this, folks, since 1969. I paid attention. I've been trading energy since they started trading as futures. And no, you learn the game and you learn what not to do. It doesn't mean that you know when to be long. Nobody walks on water. Nobody has the magic ball. But you know, hey, the first cold spell is going to give a big kick to it. That's what you play, and that's what happened. And it's now fait accompli. It's already occurred. When I look at the S&P, no matter how the rally is going, you're still not back over the 18-week average of closes. It is still the resistance point, and the bias of the market is down. I realize we're getting a rally, and I see that it's up here, and I see that the swing line is not trending. The swing line, and let me explain this, it looks at the previous day, and there's 5 rules that make it up. I created this. I think I did it 25 years ago. My son, who's in his late 30s, I did it just to see, maybe he was 13, 12 years old. I wanted him to be able to say to people, look, I can look at any chart and tell you what the trend is. He liked magic, so I said, this will fit in with it. And I taught him how to draw the lines, and then he got it. Okay, he didn't like being a broker. He doesn't like the world of finance. Okay, but that's his thing, not mine. But I was able to teach him, and from there, believe it or not, I have sold literally, I don't even know how many courses, but think about it, three iterations, maybe 5 different reiterations of the charting course. I'm going to do another one again, by the way. So it's be the 6th or 7th. I don't even know myself. Of the course, I always bring it up to date, and I'm going to do it this coming year. I'm finishing up now my outside day course. I want to get that done starting tomorrow in a big way. I'm going to throw a lot of effort in it. Higher high, lower low. That is not a trend. There's 5 different ways that you draw this line. You have to see, do you have an inside day, higher high, lower low, outside day up, outside day down. You put up the rules, and from there you build it. And I'm always looking, the first thing I look at on a chart, is it in a trend? If it's not, I don't care what it's doing. And it's not. Nobody's going to tell you that an uptrend is made of a higher high and a lower low that is a chartist that I've ever met. I'm sure there's somebody out there. But I would say the mainstream, I'm talking 99% mainstream, they'll look to see and tell you An uptrend makes higher highs and higher lows. A downtrend, lower highs and lower lows. And no trend, in some manner, has a higher high and lower low. Number two, the market is not challenging the 100-day moving average. It's playing at the 18. Okay. The Bollinger Band did restrain the market with that number. It would still, in my opinion, act as that. That's why Bollinger Bands are so darn important. If you don't learn how to work with them, it's like your hands tied behind your back. I don't care if you're a stock, spider, ETF, options trader. If you can chart it, you got to learn how to work with this. It's simple. It's really simple. And you hit the band, you don't want to be long all your position, or you want to be out of all your position. Hit the bottom band, same identical thing, and there's rules to play with it when you put the slow stochastic indicator with it. It's really that easy to work with. And what this is telling you is, number one, you're void of trend. The bias is up, momentum is flat in the market, and you're just sort of hanging midway through it. It's not doing much of anything. In the NASDAQ, it's still bearish. I know you wouldn't believe it because you're watching the markets rally, but they're rallying off the Bollinger Band that they hit on Friday. That was the cover zone. So you're getting a bounce. You could easily go to the 18-day average. You'd have to take out this high all the way back here to negate the downtrend. That's a heck of a rally. I'm not saying it can't happen, but I think the pros are waiting to sell into that 18-day average right in front of it. When you look at the Dow, you have a higher high, lower low, and you're fighting for the first time against a 200-day average. Remember, that's a one-year average for all practical purposes. So that's what you're fighting against, back and forth, one day up, one day down. But are you embedded? Not yet. The market has got both numbers over 80. Okay, that's important. If we go to the close today, which was Monday, this is Monday's close, both numbers over 80. Were they over that on Friday? No, you had a number in the 70s. So you have one day, Monday, where the market closed both numbers over 80. Maybe today's it. You're still very overbought. And you're going into the election, and who knows what that's going to matter to the market, because emotions are going to run pretty crazy. Everybody's going to think. Let's assume the Republicans sweep. They don't come into power until January. They don't take control of much. The market likes to anticipate it, but then they got the Fed. You got to step back, and the Fed's going to look at this. I'm not convinced the Fed wants this market up. Be careful about that. In the Russell, we have a market that's got a higher high, lower low, and very important, each break now to the 18-day average has found support. This is one of the strongest of the indices all of a sudden. It has taken leadership. It's got lots of resistance between 1878.30 and 1879.60, and the first battlegrounds between the 18-day in red and the green, the 100. Is there a trend? No, you have a higher high and lower low. We then get to the VIX. And in the VIX, you have an embedded reading. What have I said to you here and in my subscriber videos? When you get that bearish embedded reading, it's bullish the stock market, not bearish it. The lower this number goes, the less insurance people are taking out. They're saying the market's going to be just fine. They don't want to get the insurance products. And I realize there are people saying they're replacing that with option strategies and doing other things. And I'm agreeing with them. I'm not disagreeing. But I'm also saying you don't abandon the old rules. And the old rules saying there's no reason at this point on this chart to own insurance. Lose the embedded reading, then I can make the argument you'll get back maybe to these first averages, and you got to fight to get to the 18. When you look at the 30-year bond, it's bearish. You're making lower lows, lower highs. You haven't been able to close over the 18-day average. You are oversold. So if you get to the lower Bollinger Band just the way you did back here in a way, and back here, to a degree, this one, if you're not embedded, you're looking to see a lot of short covering. You're not embedded at this point. 10-year note, same thing. You have a bear trend coming down into the Bollinger Band. Each time it hits it, I'm going to look for major support in the market. The dollar has turned down. With this action of Friday and confirmed today, lower highs, lower lows, momentum down, bias down. The support areas are 109.52 down to 108.56, but this market's looking quite tired on the upside. Could it be that we just end up trading from the upper band to the lower, the way we did from here to here? Yes, that is very, very possible, because one guy can make that work. Fed Chair Powell. We have a CPI report coming out on Thursday. If it's hot, he gets the benefit, along with other Fed members, of looking to see what's the December report, because I looked at the calendar. It's around December 13th that the next FOMC meeting is, and I believe the CPI will come out in front of it. That I didn't check, but I will. I'm pretty sure it is. It always comes out right at the beginning of the month. Therefore, they're going to get two CPI looks. Let's assume this is a hot one. They'll look to see, is it hot again and hotter come the next one. Let's assume this isn't so hot, that we start seeing the slippage. Well, if they see the slippage again, even further slippage in December, there'll be no 75 basis point hike. They'll go down to 50. So all kinds of things at work here, and you've got to be aware of them, including the election and the initial headline results from that. Then we get the euro. Remember, 40% of the dollar index is made up of this: higher lows, higher highs. Powerhouse in this market. So that's important. I then look at the British pound. Well, the pound is marking time back and forth. There's about $60 billion that have to be cut between Mr. Sunak and Mr. Hunt from the budget. They're going to do it as a mixture of raising taxes, not what Ms. Truss had done, raising taxes, they have no choice, and cutting spending. How they get it done, how they do it and don't strike the terrible ire of the citizens, and what do they do for energy prices? I don't know, but energy prices aren't falling. You've seen that, and that is something to be concerned about. When you go to Bitcoin, you're overbought in a market staying over the 18-day average. The bias of the market is up. It's no longer as bearish as it was. The big question is, did it bottom out here? That is, as I see it, the big question. It may have. Then when I look at the differential between Brent and WTI, it has fallen over the past few days right into support against the 18-day average at 722 difference. And when you look at the Brent here, you have an embedded reading in the making. Let's take a look. You can't count today. We don't know how today's going to finish up, but we can certainly look at Monday. Both numbers over 80. Both were over 80 on Friday. Were they on Thursday? No. Guess which day determines if they embed? Today. You're at a resistance point. The odds are you're not going to stay above the upper Bollinger Band. So the question is on slippage, if you get that, how much does it slip and does it embed? And if it does the market start bemoaning a buy? And that's what I think it's going to do. I think it's going to tell you got to be a buyer on breaks. It's possible WTI follows right behind it. Heating oil, this was the spot to come out. This was the first big rally, okay? The first big rally, and I'll come back right here. I hit my hand there. That got you there. I said the first cold wave would kick that, and especially natural gas, since it was so depressed. Tell me that wasn't the call. I told my clientele, all my subscribers, you don't want to be short this anymore. You're going to get a bounce. I did not know it was going to go up here. I knew that we'd get a bounce. I believed it through my soul. Did I see it on the charts? I saw reasons to not be short. I did not know it was going up that high. And today was the day to bail on the whole position. Why? You're up to the 200-day average, the upper Bollinger Band, and you're not embedded. I keep talking about embedded. Learn how to work with this. It doesn't mean it works all the time. There is no technique that works 100% of the time. Is this the best one I've ever seen? By far. If I had to have one thing to trade in my whole career, this is it. Take a look at this. The course is very inexpensive. You get access to my morning updates with it, the free charting software with it. You get more goodies that make up the whole price of it, in other words. You will learn this in 3 to 5 days. It's really that simple. 13 chapters, each short. Do what I do, follow it. I'll reinforce it for 2 weeks with you in my subscriber videos, and away you go. I'm Ira Epstein. Please take the time and look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.